If you were born before 1966, there is a clock ticking that you cannot see, and by the time you hear it, it will be too late. While the news talks about politics, the Social Security Administration quietly updated a rule that changes how your 2026 checks are calculated. This is not a rumor. By the end of this video, you will have the exact form number and the exact phone number you need to stop this from happening to you. This is why you need to hit the subscribe button right now. The rules are moving faster than the mail, and if you are not subscribed with notifications on, you will find out about these changes after the money is already gone. Let us start with the most important number in your life. The Social Security Administration has set the earnings limit for 2026 at $23,400. If you are still working and you make more than that amount, the government is going to take a bite out of your check before it even hits your bank account. They will take $1 for every $2 you earn above that line. That is a 50% tax on your extra income. Nobody talks about this, but this rule affects millions of people every single year, and most of them do not find out about it until April when they get a surprise bill from the government. I need you to share this video with one person in your family born in the same decade as you. If we do not look out for each other, no one will. Let me tell you about Maria. Maria is 66 years old. She retired after 40 years of work. She did everything right. She waited until her full retirement age to start collecting. She expected to get $2,200 a month. Instead, she got $1,800, $340 a month less than she planned. Nobody told her about the earnings limit before she retired. Nobody sent her a letter. She found out the hard way, and by then, there was nothing she could do. $340 a month times 12 months is $4,080 a year. Over 20 years, that is $81,600. That is a brand new car. That is 2 years of rent. That is a financial disaster that could have been avoided with a single phone call. The rules are different depending on when you were born. There are 3 age groups you need to know about. First, the group born between 1943 and 1954. Your full retirement age is 66. If you earn more than $23,400 in 2026, Social Security will withhold $1 for every $2 you earn above that threshold. The good news is that this money is not gone forever. When you reach your full retirement age, Social Security will recalculate your benefits and give you back some of what they took. But you cannot pay your bills with money you will receive in 3 years. You need that money now. So for this group, the fix is simple. You need to know the threshold before you retire. Check that bell icon. If it is not turned to all, YouTube will not tell you when I post the emergency updates on these benefit changes. Second, the group born between 1955 and 1959. Your full retirement age is somewhere between 66 and 2 months and 66 and 10 months. For this group, the earnings test rules are more complicated because the threshold is lower in the years before you reach your full retirement age. The closer you are to retirement, the more you can earn without penalty. The farther away you are, the less you can earn without penalty. This is why it is so important to know exactly when you were born and exactly what your full retirement age is. 1 month can mean the difference between having your check reduced by $200 or having your check reduced by $400. Third, if you were born in 1960 or later, your full retirement age is 67. But here is the twist. If you reach your full retirement age during the year, the limit jumps up to $63,120 for the months before you reach that age. That is a huge difference. If you turn 67 in July, you can earn up to $63,120 for the first 6 months of the year without having your benefits reduced. That is information that most people do not know, and it could put an extra $500 a month in your pocket. I need you to share this video with one person in your family who was born in the 1960 seconds. They are planning their retirement right now, and they are making decisions that will affect them for the rest of their lives. Now let us talk about the COLA. The government calls it cost of living adjustment, but I call it the inflation fight back. Every year, Social Security looks at how prices are changing. They look at the Consumer Price Index, which is a fancy way of saying they look at how much everything costs. If prices went up, they give you a raise. If prices went down, they do not take money away. They just do not give you a raise. But here is where it gets complicated. The COLA for 2026 is going to be smaller than the COLA for 2025. That means your check is going to go up by less than it did last year. Now that might sound like good news. Prices are going up more slowly, so you do not need as big of a raise. But the problem is that your expenses are still going up. Rent is still going up. Food is still going up. Medicine is still going up. The COLA is based on an average, but your actual expenses might be higher than the average. This is especially true for people who have high medical costs. This is why you need to hit the subscribe button right now. I am going to post a video in the next few weeks about exactly what the 2026 COLA is going to be and how it is going to affect your check. That video is going to be live before the end of the month, and you need to see it. Now let us talk about something that nobody wants to talk about, but everybody needs to know about. The government overpayment trap. This is one of the most frightening things that can happen to a Social Security recipient, and most people have no idea it exists until it happens to them. Here's how it works. The Social Security Administration makes a mistake. They send you too much money. You spend that money, you pay your bills with it, you plan your life around it, and then, months later, the government realizes their mistake. They send you a letter saying, hey, we gave you too much money, and now we want it back. They call it a clawback. They want to claw back the money by taking money out of your future checks. And here is the worst part. They do not care if the mistake was their fault. They do not care if you did not know you were getting too much. They do not care if you already spent the money. They want it back, and they will take it out of your check whether you like it or not. There are two things you need to know. First, if you receive a letter from Social Security that says you were overpaid, do not ignore it. Do not throw it in the trash. Read it carefully. Figure out how much money they are claiming you owe them. And then, if you think the overpayment was their fault and not yours, you have the right to appeal. The form is called SSA-632. The deadline to file an appeal is usually 60 days from the date of the letter, so do not wait. Second, if you cannot afford to pay back the overpayment, you can ask for a waiver. A waiver means the government agrees to forget about the money they overpaid you. The form is called SSA-634. Again, you can get it online, or you can call Social Security and ask them to send it to you. Check that bell icon again. I am going to do a full video on the clawback rules in the next few weeks. Only if you have notifications turned on. Now let us talk about the success tax on Medicare, also known as the Income-Related Monthly Adjustment Amount, or IRMAA. Here's how it works. Medicare Part B is the part of Medicare that pays for your doctor visits and your outpatient care. Everyone pays a monthly premium for Part B. In 2025, the standard premium is around $185 a month. But if you make more than a certain amount of money, you have to pay more. The government looks at your income from 2 years ago, and if you made more than $106,000 as an individual or more than $212,000 as a married couple, you have to pay a higher premium. The extra amount is called the Income-Related Monthly Adjustment Amount. That is the success tax. Let me break this down for you with real dollars. If you are a single person and you made $130,000 in 2024, your Medicare Part B premium in 2026 is going to be higher than the standard premium. The exact amount depends on how much you made, but it could be an extra $50 to $60 a month. Over a year, that is $600 to $720 extra. Over 10 years, that is $6,000 to $7,200 extra. And this is money you are paying for the rest of your life, as long as you have Medicare Part B. I need you to share this video with one person in your family who is still working and making a good income. They need to know about this success tax. If they are planning to retire in the next few years, they need to understand that their income in the years before retirement is going to affect their Medicare premiums for decades. There are strategies they can use to lower their income in the years before retirement so that their Medicare premiums are lower for the rest of their life. Now let me talk about a group that is often overlooked. Widows and widowers. If you lost your spouse, you might be eligible for a survivor benefit from Social Security. This is separate from your own work record, and it might be larger than the benefit you get based on your own work record. But here is where it gets tricky. If you remarry before age 60, you lose your eligibility for the survivor benefit. That is a hard and fast rule. But if you remarry after age 60, you can keep the survivor benefit. That is an important distinction that a lot of people do not know about. And here is another important distinction. If you are a widow or widower and you are collecting a survivor benefit, you might be able to switch to a benefit based on your own work record instead. Or you might be able to collect a combination of both. The rules are complicated and they depend on your age, your income, and when you started collecting benefits. But the potential payoff is huge. Some widows are leaving thousands of dollars on the table every year because they do not know they have options. Now let me talk about divorcees. If you were married for at least 10 years and you are now divorced, you might be eligible for a benefit based on your ex-spouse's work record. But there are rules. You have to be at least 62 years old. You have to have been divorced for at least 2 years. And you cannot be remarried, or if you are remarried, you have to be divorced again to claim the ex-spouse benefit. But here's the key thing. If you are eligible for a benefit based on your own work record and also eligible for a benefit based on your ex-spouse's work record, Social Security will give you whichever one is higher. They will not give you both. So if your ex-spouse's benefit is higher than your own benefit, you should claim the ex-spouse benefit. If your own benefit is higher, you should claim your own benefit. This is why you need to hit the subscribe button right now. There are millions of divorcees out there who are collecting a smaller check than they should be collecting because they do not know they have options. I am going to do a video about this in the next few weeks, and you need to see it. Now let me talk about the penalty for taking benefits early. If you file for Social Security before your full retirement age, your benefits are reduced. It is that simple. The reduction is permanent. It lasts for the rest of your life. Let me give you the real dollar impact. If your full retirement age is 67 and you file at age 62, your benefit is reduced by 30%. That is not a small reduction. That is a massive reduction. If your benefit at age 67 would be $2,000 a month, then at age 62 it would be only $1,400 a month. That is $600 a month less. Over a year, that is $7,200 less. Over 20 years, that is $144,000 less, and you cannot get that money back. The reduction is permanent. This is why I always tell people to wait as long as possible to file for Social Security. I know it is hard to wait. I know you want that money now, but the math is clear. If you can afford to wait, you will get a bigger check for the rest of your life. But here is the twist. There is an exception. It is called the restricted application. If you are at your full retirement age, you can file for just the spousal benefit and let your own benefit grow. The spousal benefit is worth up to 50% of your spouse's full retirement age benefit. And by waiting, your own benefit continues to grow. It grows by 8% every year from your full retirement age to age 70. That is a guaranteed 8% raise every year, no matter what the stock market does, no matter what inflation is, just a guaranteed 8% more money. Check that bell icon one more time. The restricted application strategy is one of the most powerful strategies in all of Social Security planning, and most people do not know about it. I am going to do a full video on it in the next few weeks, and you need to see it. Now let me talk about something that affects a lot of seniors. The penalty for not signing up for Medicare at the right time. If you do not sign up for Medicare Part B when you are first eligible, you will pay a penalty for the rest of your life. The penalty is 10% for every year you were eligible but did not enroll. That is a permanent increase in your Medicare premium that you will pay for the rest of your life. This is why you need to go to the Social Security website right now and check when your Medicare enrollment window opens. Do not wait. Do not assume you will remember later. Do it now. Mark it on your calendar. I need you to share this video with one person who is about to turn 65. They need to know about the Medicare enrollment window. They need to know about the penalty for signing up late. They need to know about the exceptions to the penalty. Now let me talk about something that a lot of people forget about. The Social Security statement. Every worker is entitled to a Social Security statement that shows how much they have earned, how many work credits they have, and how much their benefits will be at different ages. You can get this statement online at ssa.gov, or you can call Social Security and ask them to mail you a copy. This statement is one of the most important documents in your financial life. It tells you exactly how much money you are going to get from Social Security, and it gives you the information you need to plan your retirement. But a lot of people do not look at it. A lot of people do not even know it exists. This is why you need to go online right now and request your Social Security statement. Look at it, read it, understand it, and then come back to this channel and watch the videos about how to use that information to plan your retirement. Now let me talk about the most important thing in this video, the phone number. If you have a question about your Social Security benefits, you can call Social Security directly. The phone number is 1-800-772-1213. You can call Monday through Friday from 7 to 7 p.m. It's Eastern Time. The representatives can help you with almost any question you have about your benefits. But here's the key thing. Do not wait until there is a problem. Call them now. Call them today. Ask them to send you a Social Security statement. Ask them to explain your benefits. Ask them to tell you what your full retirement age is. Ask them to tell you what your benefit will be if you file at age 62, age 67, and age 70. Get the information you need to make good decisions. Your Social Security benefits are probably the largest source of guaranteed income you will ever have. They are adjusted for inflation every year. They last for the rest of your life. And they are protected by law from creditors and bankruptcy. This is why it is so important to get them right. The decisions you make about Social Security will affect you for the rest of your life. If you file too early, you will get a smaller check. If you file too late, you might run out of money before you reach age 70. If you do not know about the earnings test, you might get hit with a surprise reduction. If you do not know about the Medicare premiums, you might be surprised by how much comes out of your check. This is why you need to subscribe to this channel. This is why you need to turn on notifications. This is why you need to watch the videos I am going to post in the next few weeks. The information I am providing you with today is worth thousands of dollars. It could be the most valuable information you ever learn about your retirement. One more time, hit the subscribe button, turn on the bell icon, and watch this channel like your retirement depends on it, because it does. We have covered a lot of ground in this video. We talked about the earnings test and how it can reduce your check by hundreds of dollars a month. We talked about the COLA and how it might not keep up with your actual expenses. We talked about the clawback and how the government can take back money they overpaid you. We talked about the success tax on Medicare and how your income from 2 years ago affects your premiums today. We talked about survivor benefits and how the rules are different for widows, widowers, and divorcees. We talked about the penalty for taking benefits early and how waiting can mean a bigger check for life. We talked about the restricted application and how you can get a spousal benefit while your own benefit grows. We talked about the Medicare enrollment rules and the penalties for signing up late. We talked about the Social Security statement and how you can use it to plan your retirement. We talked about the phone number you can call to get answers to your questions. This is a lot of information. It might be overwhelming. That is okay. You do not have to remember everything from this video. You just have to remember one thing. Subscribe, turn on notifications. Watch the videos that are coming out in the next few weeks, and share this information with the people you love. The government has a system. The system is designed to take money from people who do not know the rules. You now know the rules. You have the information you need to protect yourself. Use it. Share it. And do not let the government catch you off guard. Thank you for watching. I will see you in the next video.